So, Corey, the U.S. economy added 73,000 jobs in the month of July. That was well below estimates of around 100,000. And then prior months were also revised lower. So, put these numbers into perspective for us. What do they say about the current state of the labor market?
Well, if you've ever been to Chicago and taken the L to the airport, you know there's a section of the L where it feels like the train's going to fall off the track. It never does because everyone keeps going to the airport, but that's what today's jobs report is going to feel like for some folks. It feels like the labor market is wobbling. In part because of those major revisions we saw for May and June, about half of those came from a decrease in government payroll. So we thought government payroll was much higher than what it was, and that's always been the Achilles heel of the labor market since about January 2023. Over 80% of the roles that have been added are coming from three places. They're coming from government, healthcare, leisure, and hospitality. So any collapse in government hiring is certainly going to impact the labor market at this moment. But what we do see is that, like those tracks, we know we're not going to fall off the rails. Unemployment is still 4.2%. It only ticked up a bit. It's still holding pretty steady. So a lot of people are employed. We've seen initial claims come down. We've seen continuing claims remain pretty steady. And overall, we have seen the labor market be pretty steady this year. In LinkedIn's data, up until about June, we did see the LinkedIn hiring rate remain, it bounced around, but it was about where it was in January. So overall, we have seen steadiness in the labor market so far this year, but this jobs report is certainly going to give folks pause.